Hi, this is Coach Munene. Today we're going to be talking about joint life insurance policy. Consider a couple, a two-household income where there's a man, there's a spouse, and they are each contributing towards the expenses of the family. So one person takes care of the school fees, takes care of the rent, the other person takes care of the food, the groceries, and probably pays the nanny. So what happens in the unlikely event that one of them dies? It means that this surviving spouse has to take care. So if they were doing 50-50, they now have to take care of the other 50, the other expenses by themselves. Okay, if they were doing 60-40, 70-30, that other responsibility now lies squarely on them because this other person has passed on. Okay, so walk in joint life insurance policy. Okay, it's a joint life, a combination of the husband and the spouse, all of them being insured in one policy. So their two lives are insured. So that if one of them passes on, then the insurance company pays the surviving spouse. So say, for example, they took a 10 million or a 20 million policy, depending on how much they can afford. So when one spouse passes on, the insurance company pays the surviving spouse, say the 10 million or the 20 million. Let's even use the 10 million as an example. So what I've seen in most Kenyan settings, when a spouse is bereaved, when somebody has passed on, the friends will rally together, they will come and commit to take care of the surviving spouse. Most times the widow, take care of her, take care of the children. Watoto watasoma. We will make sure these kids get a good future. Yeah, we will make sure these kids are educated. But oftentimes, that is just a promise. Oftentimes, that widow is left on her own to fend for herself, to now find a replacement income that this dead spouse was providing. Okay? Walk in, like I said, walk in joint life insurance policy. In that funeral service, I'm not coming with stories. I'm coming with a check of 10 million shillings to be given to this widow. Okay? To be able to take care of herself and take care of her children and her family continuity. She's double lucky because I'm not only coming with a 10 million check, I'm also coming with financial advice where to invest these 10 million shillings. Okay? This day and age, we're just not allowing you, we'll allow you to take the 10 million, but we are also giving you financial advice so that you don't blow the 10 million in one go. You invest the 10 million in this day and age, there are special funds that will give you a return of 20%. So that means if you invest the 10 million, you'll be getting a monthly income of about 175,000 shillings. That can comfortably take care of rent. If the guy was paying rent, if the guy was taking care of school fees, 175,000 shillings coming. Tax-free, not that we give you 175, then remove tax, or 175,000 shillings coming to you tax-free. Okay? The insurance company pays you the 10 million lump sum after your spouse dies, and then we give you the advice of where to invest. Like I said, these days there are special funds that can pay you 20%, which will loosely translate into Kenyan shillings 175,000 per month. And therefore, life continues. So if you know somebody who needs to hear about a joint life, or you need a joint life, contact the number that is appearing here or the email that is appearing here. Share this video. This video is available also on TikTok. It's available on YouTube. You can be able to share this video to somebody who needs to understand how a joint life policy works.